The following is a presentation of TFNN.
Let's go to David from Clearwater.
Hey, Steve, thank you for taking my call on this one, and to pass a compliment to you. Taken a lot of classes from Tom since I became a Tiger back in 2009, and they're always phenomenal classes, and last Friday was my first class with you. And just want to say, Steve, fantastic. You were well prepared. Material was excellent. It was timely. It was a really, really, really good class, and you kind of opened my eyes to a few things that have enabled me to use your terminology. Take massive action.
Hey, there you go. I love it.
Live at TFNN, The Trader's Edge, with your host, Steve Rhodes.
And he's picked out a landing spot that is a good 25 feet above the hole.
There's a good chance he doesn't get this inside the Marco's ball.
Well, here it comes. Oh, my goodness. Anything like that. This guy's pretty good.
Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the August 7th terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a wonderful Wednesday. Let's make sure that you and I, that we do all that we can do today to have a terrific Thursday. And, you know, Lao Tzu, he once said, the journey of 1,000 miles begins with the first step, with but just one step. So thank you for taking the step to join each of us here each day at TFNN. As you know, we do programming live now 10 hours a day. We begin our shows at 8 a.m. with John Logan. Great show out there. Nice show today, John. And during that, each of us take a look at different technical tools out there. So stay tuned. Today we're going to take a look at, for the next couple hours, we'll take a look at A to B equals CD patterns. We'll look at Fibonacci expansions, retracements. We'll look at Japanese candlestick charting. We'll look at market profiles and every other tool that we can to help you to identify where price is going. And, of course, this is an interactive show. That means you can give us a call. You can call us at 877-927-6648. We'll take a look at your stock chart, work through it with you, see what you're looking at to give you a viewpoint of what I think that your equity, your commodity, your currency, whatever it is that you trade might be doing. Now, true story. On a visit to Sir Jacob Epstein's studio, George Bernard Shaw, and he was the co-founder of the London School of Economics, he noticed this huge block that was in the corner. And he said to his friend, he said, "What's that for?" And Epstein, the sculptor, he said, "Well, I don't know just yet. I'm still making plans." Now, Shaw, his reply was, "You mean you plan your work?" You see, he was a playwright. And as a playwright, he changed his mind several times a day. In fact, several times while he was creating his next manuscript. But if you're working on a 4-ton block, folks, think about that. If you're working on a 4-ton block of stone, planning is the first step. And that's the key to trading and investing as well. We plan our work, we work our plan, and when everything is in place, we take action. What Stevie likes to say, we take massive action. So it is terrific Thursday. This is TFNN. I'm Steve Rhodes, and welcome to the show. Let's go take some massive action. Our call number again, 877-927-6648. Right now, Dow futures up 41 points. They're trading out at 16,436. S&P futures up 7. They're trading 1922. NASDAQ futures up about 11 points, trading at 38.79. Russell 2000 up a couple points, trading at 11.23. King dollar up 2 pennies, trading out at 81.53. Gold back $2, trading at 13.06. Silver back 6 pennies, trading at 19.96. Light sweet crude up 31 cents, trading out at 97.23. A quick. How about that? A quick and a quick peek across the globe out here. I was just combining words. Let's take a look at the DAX. It's flat. It's off 2 points. FTSE flat, it's up 2 points. So we got a flip of a coin over in Europe. Over in Asia last night, the Nikkei was up 72 points. Hang Seng down 196 points, off 0.8%. The Shanghai off a little over 1%, down 31 points. All right, so where do we begin our day? Let's take a look. What's popping in the pre-markets out here? You got Stratasys, the 3D entity, 3D company out there. They closed at $98. They're trading out at 108. So you got a nice little pop out there. They're out with numbers. We'll take a look at them. Ctrip.com, CTRP, looks like an investment being made by Priceline. That's up popping. Closed at $60 and change. Trade right now at $66. To the downside, the Thoratic Corp, THOR, doesn't sound like Thor to me. This is going to get a haircut this morning. They're going to trade below its most recent swing point out there. Out with numbers as well. It closed at 32.57. It's trading at 24.15. But let's begin our day. Let's go see what's going on in the futures market. Let's start off. Let's take a look at the Rhodes Momentum Trading signals out here. We'll take a look at our stock chart. What we can see here this morning, if you're watching us on TigerTV, thanks so much for doing that. If you're listening on your radio or your mobile device at TFNN.mobi, don't forget you can catch the live stream of the show by going to the homepage of TFNN.com. Upper right-hand side, you'll see a button, 3 little smartphone devices on it. Click on that, and you'll see this show stream live. Of course, the archive is on Channel 9. The 10 o'clock show is archived and is played on Channel 10 on Tiger TV. And what we're looking at here, I'll describe to you what we're looking at. We're looking at the daily chart for the S&P futures contract. We can see the bulls here are hanging out at these lows. The bulls are actually trying to defend this territory. Yesterday was a draw, a true draw. It was a true doji candle out here. The open of the session was 1914.75. The close of the session, 1915. That's a tick, folks. Now, that is a doji. Now, for many, dojis have meanings. They'll say that a doji, at in the middle of a move at a low is maybe a halfway marker. Maybe it is, maybe it isn't. Stevie doesn't use dojis at the lows out there, except maybe on the next trading session out here because of what they can form. Right now, you got a bullish engulfing candle. Well, that's kind of how about that? That's not even a word. That's kind of normal out there. That's natural. I mean, what does it really take in order to engulf the prior day's session? But we got the bears that were hanging out on August the 5th, but any move above, I'd say probably about 1926, I'm just eyeballing it, 1927, you're starting to get into the Morning Star, a 3-candle formation that the bulls are hanging out down at this level. You got this little bull sash candle that took place on August 4th. That set up support at the low of August the 1st. August 1st low, 1910.25. You can see the price is not closed below that 1910.25. You've seen intraday spikes, but you've not seen it close below it. So what does that really set up? I would say that today, if you get a close below 1910.25, a close below that, you're likely setting up an A to B equals C to the downside. Now, we're going to take a look at the bullish case. We always have to. It's incumbent upon ourselves when we take a look at any trade, anything that we're looking at, to look at both the bullish and the bearish side. So if that's the bullish side, if you were to see a close below there, and I'm not saying that's what you're going to see. In fact, I'm saying you're probably not going to see that, at least not today, and maybe not for a little while out here. But if we take a look at that, I can't control what the markets do, but I can tell you what the patterns would say. Our A point out here is going to be that swing from July 24th. Right now, I'm going to go ahead. I'm going to use the that trading session here from August 1st, and that's going to be my B point as we speak right now. And the C point's going to, whoops, I didn't mean to grab that. And the C point is going to be the top of that trading session from that bull sash. So any close from the bears, this is what you want to see. And you want to see it today, or today, tomorrow, but you'd like to see it happen today on a Thursday as we start to end towards the, towards the end of our summer. In fact, schools start in Florida. Schools start back in elementary school, at least. I believe they start back this coming week. Not this coming week, the following week for sure. In any event, if you do see a close below 1910.25, the bulls, even though they've been trying to flex their muscles out there, it won't be such a good flex. And you'll see them move down to the 1-to-1, takes you right down to the 200-day exponential moving average, right in the 1862 level. As we speak right now, the 200-day exponential is 1863. So right there, you would expect that price to try to find some strong support. I would say that it would break through that level if, in fact, we were to see it close below there today. I'd say 1841 is more likely the level where it would head to. Now, let's say that that is not what it is doing out here. So that's your bearish side. Your bullish side, we know that the bulls are defending price out here. So now what you're looking at is you're looking at where's price likely to move up to. And I'd have to say price is likely to move up into about the 1940-ish level. At 1940, you got the 50-day exponential moving average. You've also got the bottom of the daily market profile out there. So 1940 seems like a pretty decent target. Now, you're at 1922 right now. And at 1940, it's going to feel like the sky is not falling. And maybe the sky isn't falling. I can't answer that. But that's going to be really a key level that, in essence, right around that range where you should find some stiff resistance. You get a close above that, depending on not 1941, but you get a close above that, and maybe the sky isn't falling out there, and that is what's going on with your S&P futures contract. If we go take a look at the Russell 2000. We'll go ahead and put that on the screen. Give me a moment to pop that up here. Let's go see what the Russell is doing as we speak right now. The Russell here, this formed the bulls were hanging out right here in the trading session of August the 4th. So that is support inside the Russell 2000. It's going to be the trading session from the prior day, August the 1st. So the key level to be watching there is going to be 1103.10. You get a close below 1103.10. And that'll set up a move all the way down to the bottom of the consolidation. You ask where the bottom of that consolidation pattern is. Well, you come all the way back here. I'd have to say down to the lows of May 15th out there. That would be your first target. That's in the 1078 range. But as we speak right now, the bulls are trying to defend their territory inside the Russell 2000. What is their likely next move on the way up out here? What we can see is they're starting to make, higher lows out here. And they're starting to also make higher highs each of the last trading sessions since August 1st out there. You know what Stevie likes to say? He likes to say, something to think about. Well, if you do see a continued move higher inside of the Russell 2000, I suspect that's what we're going to see. Well, that 200-day exponential moving average, that's going to be your first target level, and that's at a price point of about 1132, so another 8 points higher. I would have to say 1146 comes into play as well. That's your 50-day exponential moving average, and 1149 is probably the area where you find resistance inside the Russell 2000. Of course, if you're short, and that's the move that you see, that sphincter muscle will probably get a little bit tight. But all I want to do is be able to set up for you exactly what the current message of the markets are. That's really all that I can do. Now, as I said before, as we looked at the S&P futures out there, it'll feel like, and it'll be communicated that the sky's not falling. I'm not sure that that is really the case out here. All we're looking at the moment is a counter-trend rally as we take a look at these markets. If we go over and we take a look at the Dow futures, let's go see what the message behind the Dow futures is. And I know I make, I'm not going to comment on that. But let's take a look at the Dow futures out here. Just going to give you the message of the markets. Still, the Dow futures, horrible looking. Is there a bullish candle anywhere? No, there's really not out here. So it's going to be from the Dow that we probably get some kind of message. Although we're getting a message from the S&P, we're getting a message from the Russell 2000. There's certainly clarity there. But inside the Dow, pretty hard to make a bullish case out here. So it'll be the other indices that go ahead and pull those 30 beautiful-looking Dow stocks higher as we see this counter-trend rally continue to unfold in the marketplace. 877-927-6648. Steve Rhodes, TFNN. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures up 56, S&P up 9 right now. You know, yesterday we were taking a look at we were taking a look at the euro primarily. I think a couple days ago we looked at the U.S. dollar, Japanese yen currency pair. So let's go ahead and pop that up on the screen here for you. Take a look at the chart patterns. Now, one of the elements that we were looking at was the mere fact that a couple trading sessions ago, July 30th. That the U.S. dollar, Japanese yen popped up above a descending price channel out there. And it did it with conviction, the type of conviction that you like to see behind a move. Now, the most bullish thing that price can do out here, and this works on any, it doesn't really matter what chart it is that we're looking at, just so you can apply this to every single chart and really every single time frame out here. And it's why we need to really pay attention to Goldilocks because of its breakout. I think it might have been the daily chart. But let me just stay focused right here. U.S. dollar, Japanese yen. What is the thing that it can do that would be most bullish? Well, what it can do is it can break out of that descending price channel, come back and test it, and prove that it really is a real break to the upside out here. The last time that we saw the U.S. dollar, Japanese yen break through a descending price channel, that was back here. And it was also done with a wide-ranging bar, although the bar on the current break looks better than the one that occurred back here in November of 2013. And you can see that break went ahead and led price up to about the January highs out here. Now, let's come back here. What took place yesterday, what was interesting, I happen to be have the shows on sometimes the volume's on, sometimes it's not. Sometimes I'm, doing things, what have you. And I was out of the office yesterday, so I might have been listening to a show while driving and heard Larry, while he was on the show, he's like, what the heck just happened to the Japanese yen out there? And, well, what it was doing, you can see here, this is the daily chart, the intraday time period, really shows a quick move down. I don't know what was behind the move. It doesn't really matter to us what was behind the move. What's more interesting is what actually took place behind that move. And what we saw price try to push back into that descending price channel, and it was rejected out there. So at this stage of the game here, the U.S. dollar, Japanese yen is suggesting that this break is real out here. Now, you want to see, some type of conviction behind today's move out here. But at this stage of the game, that descending price channel has successfully been tested and successfully been rejected. We did get a small A to B equals CD, the upside that it completed out here with that wide-ranging bar. So the market just simply has done, and that's a normal move. You would expect that one-to-one move out here, and then they move lower and testing that level. So we'll keep an eye on the U.S. dollar, Japanese yen, but it has done its work out there. If we take a look at gold, we have got right here. So here's gold's descending price channel. And yesterday it broke through with conviction. Now this is this is not the daily chart. This is the 120-minute time frame chart that we are working on. Or that we're working on, that we are looking at. So you can see that nice wide-ranging bar, breaking that descending price channel. And all prices have been doing here as of late is just simply moving sideways. That's more bullish than bearish action out here as it works off that overbought condition out here. Of course, ideally, you'd see gold come all the way back, test this descending price channel somewhere along the line, reject it, and then begin to move higher out there. Whether or not it's going to do that, I don't know. But that is one heck of a wide-ranging bar during the trading session from 8 a.m. to 10 a.m. yesterday. And the movement that we've seen thus far, has just been nothing more than bullish action by moving sideways versus any kind of bearish action. I think the divergence between gold and silver has been touched on enough. Gold much stronger than the silver, so no reason for us to go ahead and focus in on that. Let's take a quick look here before the market opens on a couple of these stocks. Thor to the downside. I mentioned this was trading below its most recent swing point. It looks like this. 24.11 was the last trade that fired up, and 24.11 takes you below the July 29th swing point. That's at $30.76, and 24.11 takes you below this high volume high from May the 7th. That price low is down at $30. So where is $20 taking us to out here? Let's pull this stock chart back. Take a look at the institutional selling that we've seen in this. Man, I need to put this on a weekly chart out here. I hope none of you are long Thor, Thor, at this stage, because it does not look good. So $24. How about that? $24 is going to take you into this high-volume weekly swing point low. Looks like it's headed all the way back to the January 24th, 2011 time frame. Key level of support there is going to be 22.33. The high is 26.67. Looks like it's going to tackle that level today. And if it breaks through that, that sets up a very large A to B equals CD to the downside. So any close below 22.33 inside of Thor, I can tell you what the price projection is here before we go into this hard breakout here. B point is that low, C point somewhere right up around here. That would say 1-to-1 takes you to about the 1790 area. My apologies, 1790. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization automation capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 47 points, trade out at 16,491. S&P up 7 points at 1927. NASDAQ Composite up 16 at 4371. Russell up 3 points at 1128. NDX 100 up 14 at 3888. New York Stock Exchange up 32 points. She's trading out at 10,685. Popping to the upside. Stratasys up $13 right now. We've got Lehigh Gas Partners, LGP, up 23%, up $6. Gulfport Energy, GPOR, up about 10%, up $5.60. Netflix up $6. C-Trip up $5.40. CST Brands up $5. Jack in the Box is popped. It's up about 9%, up $4.74 out there. Copa Cabana, Copa Holdings, CPA is the ticker symbol, down 14%, up $21 right now. Man, that's getting a little hammering. Thoratic Corp, we talked about that before the break, down $8, down 26%. Ann Inc., ANN, off about 8%, down $3. Babcock and Wilcox down 8%, up $2.40. Zulily down 8%, down about $3 as we speak right now. I have a request to take a look at a couple of equities out here, so let's do that. That just came in on a email. Let's take a look at these. The two are, let's see here, Florida Solar. Or not Florida. Say, why not call it Florida Solar? First Solar is the ticker symbol FSLR. And the second equity is Tesla. We'll go take a look at Tesla. I was looking at Tesla this morning. Tesla looked like a buy to me. We take a look at First Solar. Let's start off with that. It's trading up about 75 cents right now. And the question is... please look at them long, short-term buy possibilities and stops. So looking at, in essence here, the viewer, listener, looking at buying. So if we take a look at First Solar, what do we know about First Solar? Boy, talk about coming back into a breakout area. Take a look at that wide-ranging bar inside First Solar. That's a trading session from March the 19th. Now, price never made it back to the low of that bar. Sometimes it does, and sometimes it doesn't out there. Of course, an ideal buy would be at the bottom of that bar, and that's at 56.96 out here. We'll take a look at the daily chart out here. Is there any damage we see inside the daily chart? I'd have to say no. In fact, yesterday had a nice little pop to the upside out here. So, your entry point looks like inside of First Solar. Let's see, what is this to the downside out here? This is from the trading session July 8th. There were 7 million shares to the downside. Yes, there was 9 million shares to the upside. So it may have a little bit of congestion and resistance. So since you're looking at more of a longer-term buyout here, I'm going to say the bottom of the box or the bottom of yesterday's swing point. So the range out there is 60.15 to maybe about 63.02. Let's take a look at the TAS Market Professional box out here. Let's go see if there's some support or resistance on a weekly chart. And at this stage here, it's traveling on a weekly basis into the resistance zone, 62.18. So 62.18. It's right now at 66.21. But 62.18 is a pretty nice level for a buy. And the key here is going to be, the nice thing is that the week after, March 24th, inside First Solar, that's actually the swing point to be taken out with an A to B equals C to the upside. So you'd like to see it close above 74.84 on a weekly basis with more than 30 million shares out there. But First Solar looks pretty good. Let me just pull this back, see if there's anything. Looks pretty good coming in off of the bottom here from July of 2012, but it's going to have some work to do as it tries to make it all the way back, and who knows that. Let's just take a look at retracement levels. Let's just do this off of its highs all the way back in February in 2011. So let's just take a look at retracement areas. They become natural targets for where price will gravitate to. So how about that? Talk about a natural target. I know I can get it out. The 0.382 retracement of that move from the high down to the low, 74.15. That has proven to be a resistance zone as well. So inside, so from a longer term basis, if you are long First Solar, you want to see it get above 30. You want to see it get above the 74.15-ish mark. That's your dead cat. That's your 0.382 retracement, somewhere right around there. You want to see it most certainly get above the March 24th high, $74.84 out there, because that would say, hey, First Solar could move all the way up to the 112 area, the next floor, which is the 0.618 retracement level. So that's on FSLR. Let's go take a look at Tesla. What was Stevie looking at this morning? I almost put this in the newsletter as a buy here this morning. If we take a look at Tesla, it's this is the weekly chart. Good looking chart from a weekly standpoint. You got that high volume high that's untested. So it says that Tesla ought to go test the 265 level. You're trading at 251 right now, so it should be no problem to go do that. If it closes above 265, you're going to get it close above the swing point. Now, I don't think it's going to do with volume out there, but it can then continue to gravitate higher. 265 happens to be the resistance zone of the market profile as well. So it's a swing point high, a swing point with volume. This week, as an example, you've only done volume with 21 million shares going after the volume of 98 million shares. So what Tesla might be suggesting to us is that it's really just inside the consolidation range. Because if it can't close above 265 with volume out there, it closes it, tests it, closes back below on lighter volume on a daily, on a weekly, and we'll switch over to the daily chart. What you've got is a failure to swing point at highs in resistance. And that says that actually you got a nice trading range. Inside of Tesla, the trading range is all the way back down to 174. Now, the problem is you don't really have much in the way of volume to pull it down to the 174 level out here. And it's only a trading range on a weekly basis that has sort of been established, ever since the high that was formed out here in February. So let's take a look at the daily, see if there's any meaning behind the daily chart out here in Tesla. TSLA is the ticker symbol. The swing points on a daily basis, the good news is that the swing point high, just like we were looking at in First Solar, is the day after that high volume bar. That says the actual swing point on a daily basis, February 26th. So you'd like to see Tesla get above the 265 level, stay above the 265 level, and do it with more than 24 million shares. I believe yesterday was light volume coming into it was a reason to back away from the trade. Yeah, 9.2 million shares here yesterday. But it is a pretty good-looking stock chart out here, no question about it. That was for our Tigers that sent me an email and asked me to take a look at those things. Let's go take a look at some things that are popping and dropping as we speak right now. To the upside, we've got Priceline, Stratasys. Let's go take a look at SSYS, up 14% as we speak. We'll take a look at Lehigh Gas Partners as well, because that's up a nice 24%. And we'll go see what news is behind it. Now, Stratasys, they were out with numbers here, looks like before the bell, after the bell last night. Their second quarter net loss, $173,000 versus $2.8 million from the prior, the prior quarter, the prior second quarter out there. So they certainly reduced the loss. Let's take a look at revenue. Can I find revenue anywhere? Nothing that sticks out. Let's go see what Stratasys is doing from a technical standpoint on its chart pattern out here. Stratasys has a high volume high out here. It sold off, little shooting star candle, big shooting star candle, and that is where price is headed to. If you can get above that, that's really your resistance zone. So as we take a look at Stratasys, let me go ahead. We'll put the market profiles on here as well, make it a little bit easier for you to look at. Let me just do this. We'll put actually everything. I'll load it up with ketchup and mayo. No, not mayo. I don't put mayo on things. I can't, ketchup on much. French fries, right? That's where you really use ketchup, isn't it? In any event, let's take a look at Stratasys. Big shooting star, big high volume. That says that the 128.59 level should be tested. 121.99, that happens to be your market profile resistance zone. Volume up there at 6.7 million shares. Jumping this morning. Wow, it's got good volume behind the move. That's a suggestion that high is going to be tested. Already 1.2 million shares in 13 minutes of trading. So Stratasys has got some nice volume there. Don't know whether we'll take that level out. If it does, where will Stratasys head to? Hey, it looks like an A to B equals CD to the upside if it can take out that level. If we take a look at retracements on its daily chart out here, the retracement from the low, the swing point happens to be May the 9th, all the way to that high, that little shooting star candle that took place out here on July 1st. It just simply made basically about a 0.786 retracement. That being said, let's go take a look at the potential of the A to B equals CD up pattern that this would form if it can take out that high. The A point is going to be that low that we use to do our retracement level. That's the low from May the 9th. That's your A point. Your B point is the top of that shooting star. That's at a price level of 128.59. The C point a couple of days ago. And you've come off of that C point explosively today with volume. So if you take out that B point, I have to say, look, the 1-to-1 is 138.67. I would say more likely 150 would really be my target area. And but the 138.67, hey, look, that's going to be a healthy move out there because, let me put the A to B equals CD pattern back on the chart out here. How did I erase that? Wasn't really paying much attention. I must have hit the old delete key out there. There we go. Okay. Now, 138.67 takes you all the way back to its swing point high from January 2nd, 2014. So there's another benchmark. That only had volume of 813,000 shares, so it should be relatively easy to get up and over that. Let me put this on a weekly chart out here, see what pops out at us when we take a look at Stratasys. I know this has had some huge swings to the upside, to the downside, but actually looks pretty good so far as I take a look at it. Stratasys, 117.82 is the hurdle that it wants to get over from a weekly market profile. But really, you got to focus in on that shooting star. It's a weekly shooting star, too. So Stratasys would get very, very bullish out here if it can close above 1 28.59. Weekly basis, I don't know if it'll make it. That's 9.3 million shares, done 4.6 today. So it's possible. It just has to continue to pick up steam out there. And that was on Stratasys. If we take a look at, let's see, what else was out here? I said popping. Lehigh Gas Partners. Let me see, what's the news behind this? CST Brands to acquire to the general partner of Lehigh Gas. So no reason for us necessary to look at that, although one heck of a nice wide-ranging bar, daily, weekly. Let's see, what else do we have? Let's take a look at some things moving to the downside. Let's go take a look at Copacabana, CPA, cut, paste, and assemble. They are disassembling this morning, down $19, down 12% out here. Let's go see what this is trading into. On a weekly basis, it is testing its market profile low, and that's at a price level of about 132.51. Right now, you're trading at a 131.65. It's trading into a swing point so far with light volume, but I need to take a look at the day's action. That swing point it's trading into takes you back to March 3rd, 2014. 3.5 million shares down there. So far, you're down this week with 1.2 million shares, but the day is way young. This thing looks like it gapped down, so let's go see what kind of volume is behind the daily move out here. The daily move out here so far, volume to the downside, 344,000 shares. But this is a nasty-looking thing. Look at that nasty-looking thing is that high-volume untested low that takes you back to March 6, 2014. And that's at a level of 121.11 to 128.06. Looks like that is where CPA Copa Holdings is likely headed to. Let me pull this back a little bit more. Not really a consolidation to speak of, but looks like that is where she is headed to. Let's take a look at, let me see, what else we got big that's out here. You got coupons.com, C-O-U-P, and they're also having a sale today. Looks like a fire sale, 15% down about $3 out here. Looks like they're out with numbers. Generated good revenue growth, $51 million versus $39 million out here. So pretty decent top-line growth. Bottom line, but they show a bottom line. Looks like their loss per share, 9 cents versus 15 cents, so they're trimming it. Loss of 6.8 million shares versus 2.89 million shares out there. So it looks like they floated some stock out there as well. But let's go take a look at coupon.com. Let's go see what it is doing. Oh, this is pretty nasty. This is not the way you like to see an IPO. Initial public offering date looks like March 7, 2014, not too long ago. It did go test. That was a high volume high. If you look at it on a stock chart, it was tested on light volume back here on June the 3rd. Well, now it's headed back towards the lows. It's a daily chart that we're looking at. The low is on May 8th. Only 1.1 million shares down there. Shoot, today it's done 148,000. 18 minutes of trading. That is not looking good for coupons.com. A request to take a look at Las Vegas Sands. So let's go out to Vegas. Viva Las Vegas. Let's go see what's going on out there. LVS out there. And if we take a look, ooh, that does not look good. That's not pretty. Down 2.5% this morning, off a $1.73. Do I see any news on it? I don't see any news on it, but let's go check it out and see where it is trading into. So this is not looking good. We can see the trend out here, trend clearly to the downside. If you just take a look at a trend line, I put this, I don't know whether the Denner is long or short the equity, but you wouldn't want to get long this equity until it could break the trend line. That would be one. Macau is weak. Macau, that's quite an interesting place. So back in the 90s, they used to have some retail stores in Hong Kong. Stanley Market was one of them. Up at the Victoria Peak was another. Tried getting a store over on the Kowloon side. What was Nathan Road, I believe, is the name there. But, boy, they wanted a lot of key money. You know what key money is, folks? That's why you pay a lot of money to get the key just to open up the door. That's not including the rent. In any event, we get back. We'll go take a look at Las Vegas Sands. We'll go see where it is headed to. And maybe I'll reminisce a little bit about Macau and some of the trips over there. 877-927-6648. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Right now, you've got the Dow's up 45, S&P up 5, NASDAQ Composite up 14. Before we were going into that last break, I was trying to reminisce about Macau. So I see we've got a couple of dinners that have been over there. Hey, folks, if you haven't had a chance to check out the Tiger's Den, come on over to the homepage of TFNN.com and you go test drive the Tiger's Den. You can do that for 30 days. A great group of good peer group of individuals, good traders out there, and you'll be able to see all of our charts in HD out there. Now, I visited. I was in Macau back in the 90s, so quite a while ago. And at that stage, that was before there was any U.S. investment in the casinos. It was Stanley Ho that owned the entire group of casinos over there. And if you've ever been over there, you're coming out of the Hong Kong port. You're taking one of those hydroplanes, so you feel like you're in a James Bond movie out there. Now, there are fairly large boats over there that you are jumping in to get over. I think the ride is like about an hour or so, and you're going through a nasty, polluted China Sea in order to get there. Now, when I went there, it was all small casinos and pawn shops. That's basically what littered the area over there. Now, I imagine that it's quite different with all of the huge investment by the mega casinos that are over there. I remember walking into a casino. I'm not a smoker out there. I don't know if you are. And I don't mean this comment in a negative way, but it may sound that way. They have two styles of really smoking over there, smoking and chain smoking. And you walk into one of those casinos, if you're not a smoker, at least that's how it was, certainly in the smaller casinos. No idea what it's like over there. Can't imagine it's changed much. But when you walk over there, you walk into a casino, at least back then, you walked out smelling like a cigarette, whether or not you smoked at all out there. In any event, so an interesting thing, I went over there looking for potential retail locations, and back then it wasn't there. I imagine that's a whole different scene now. In any event, what you want to know is, hey, what's going on with Las Vegas Sands? So if we take a look at Las Vegas Sands, a couple of things out here. We're looking at a daily chart. Number one, you can see the decided downtrend channel line. That's the white line. I'm coming off of the swing point high back in March the 10th. That's out at 87.10 out there. Next touch point is going to be the high out here from about July the 3rd up at about the 78.13. Now, what took place yesterday is there was a high volume swing point low that was cracked and it closed below it with basically similar volume, 11.49 million shares, and yesterday's move down below 11.08. That's close enough for me. Instead of saying no cigar, I'd say there's a cigar there. Now, what does that also do? Well, you got a combination. You've got also an A to B equals CD to the downside. If we take a look at that A to B equals CD pattern, your A point's going to be that swing high back in March. Your B point on this that I'm going to use is going to be the low that took place on April 15th. And your C point is this little doji. It was almost or may have been a island top reversal. I'd have to go back and really take a look at it. So 1-to-1 A to B equals CD to the downside takes you to the 64.06 level. You've got a high volume low out here. It's quite a bit lower, by the way, and that is the June 24, 2013 area. And that's 18 million shares down there, and that's not been tested. So if Las Vegas Sands is having some real trouble, 47.95 becomes the target area, 50.83 to 47.95. But there's going to be some stopping points on the ferry boat ride down to that swing point along the way. If we take a look at the retracement levels, that'll tell us where the excursion may get off out here. Well, you got a 0.618 Gartley buy pattern that may be forming at 67.37. That's your 1-to-1 A to B equals CD. It's your 0.618 retracement level. You'd really have to see some type of reversal signal in order for that to occur. And that's a possibility. Why do I say that? Because if you take a look at the 14-period relative strength indicator, it is extremely oversold down at about the 25.78 level. Well, folks, it is terrific Thursday. Thanks so much for joining us here at TFNN. If you're off to start your day, have a terrific Thursday. I look forward to seeing you bright and early tomorrow morning, or stay tuned. One more hour with me and the Money Masters Show. Have a great day. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.